Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom. G'day guys, Jackson Milan, the Wealth Mentor, and we're here for another episode of the Financial Freedom Secrets Show. I'm in a different location today. I'm currently in our kind of local studio, so a little bit of a change of scenery for those of you who are watching the video version. If you're listening to the audio version, you might hear a little bit of a difference in sound quality, the benefits of being in a studio, which is great. But guys, I've got a really special guest here today. I've been waiting a while to pin this guy down because he's super busy, super sought after, but he's a really lovely fella, and I'm really looking forward to unpacking this conversation because we haven't gone down this path on the show before, and we're getting a lot more clients who are New Zealand based, who are growing great businesses that are building significant amounts of wealth. But one of the common themes with these individuals is that they really feel underserved when it comes to getting the right tax and structuring advice that really supports them both in the business and in their wealth creation journey. So I'm joined by Hector Bassett today, and Hector runs a business that's called Davidson Fraser. I hope I said that right. Basically, he is an expert accountant and business advisor. So Hector, thanks for joining us, mate. How you doing?
Really good, thanks. Really good, thanks.
Mate, glad to have you here. So Hector, tell us a little bit about you and your story, mate.
Okay, yeah, I thanks that it's Davidson Fraser is the name of the business. It's the middle names of our two oldest boys. We've got three boys, but we named the business before the third one was born, so we'll have conversations about that another time. Yeah, look, I've been a tax accountant for a long time. I got into it in part, I think, because of some of my history. We grew up not particularly wealthy, and my dad was good at saying the right things around money, and also taught me good messages about there's more important things than money, and I really adhere to that. A conversation that was kind of in the background was the lack of self-worth, basically. This is the thing. Money conversation, very straightforward, money in, money out. But the thing that makes it complex is us human beings. We make emotional decisions, we make half-baked decisions, and we make decisions that we're not entirely conscious of. Yeah, so I've been in the business for 13 years. I've been in tax accounting for a long time. And yeah, did that answer your question? I'm just conscious
really
might be going down a rabbit hole.
No, that's great. That gives me some good context, mate. So let's get started here, Hector. I'm sure you see this a lot, that business owners really struggle to find good accountants. Why do you think that is, mate, from an accountant's perspective? Because obviously not all accountants can be bad. Why do you think so many business owners don't have a great relationship with their accountant?
It's quite a complex question, actually, Jackson. But look, a couple of things about it. One is, I noticed this a long time ago, that accountancy, we're called accountants in New Zealand, similar to you are in Australia, similar to the US, but most of us are, well, a lot of us are essentially tax accountants. So people don't really want to understand accounting. They don't want to know about their cash flow. They come to us because in New Zealand and Australia, you have to file a tax return.
Yes.
So you're kind of starting on the back foot already. People aren't going, how can Hector really, really help me? They're going, I've got to do my blinking tax returns. I guess Hector's a decent bloke. I'll use him. So the premise of it is kind of counterintuitive. And combined with that, the tax accounting business, unlike some other businesses, and you'd be familiar with this, Jackson, as long as we do a reasonable job for people, we get reoccurring income every year. So in some way, there's not a great incentive for us to do other things. And it's a bit of historic stuff.
Yes.
People aren't really using accountants as accountants. They're not thinking about it the right way. And so accountants have got into this mindset of compliance rather than forward thinking. And that's really how I've tried to pull my business apart. I've tried to focus. You have to deal with the tax. You've got to do tax returns. And there's some real benefits you can gain if you're a little bit smart. But the premise of it is learning to get focused forward. So those relationships have fallen down in part because of some of that dynamic, and in part because the accountant is comfortable doing what they're doing, even if they've got a desire to do something else, it's easier said than done. As I said, you know that, Jackson. It's one thing you go into business because you're good at something, But
Yes.
running the business, that's the biggest challenge. And accountants might be good with numbers, but they're actually, a lot of us aren't very good at running businesses ourselves.
It's interesting you say that, mate, because it does become a little bit of a catch-22 of what I've observed, because even myself personally, I've had a lot of negative relationships with accountants over the years, but some of that's been my fault, right? That I engage an accountant, like what you said, to do the tax, to do the compliance, and then I have this expectation that accountant's then going to be able to use all of my historic data when they're looking into the past to then help me work into the future. And sure, there's many accountants who can do that. Some can't, but many can. But that needs to be part of the scope, right? And then on the flip side, accountants want to be business advisors and they want to be able to provide that advice, or many of them do, but they get so caught up in the compliance that they don't necessarily have the time or the retainer in order to warrant going above and beyond. So this becomes this dichotomy, I guess. It sounds like that's not what you do. You've got a more holistic view. So do you want to give us a little bit of a rundown of how you work with your clients?
Yeah, and it's easier said than done as well, by the way. But look, one of the things that you touched on, Jackson, is, and it's quite significant, human beings aren't particularly personally responsible sometimes. Yes. They kind of, they want to see their accountant and their accountant to do everything for them. So that's just nuts. And so one of the things, and it's really only quite recent that I've really started to dig into it and get some traction with it. One of the biggest things is, and it's less about client selection and it's more about setting expectations right from the outset. It's about saying, look, this is, as well as what we'll do for you, being clear about this. Actually, for me, for example, I won't deal with your ACC levies. You've got to deal with, I can help you with it. And there's a whole lot of things that we don't do. So by setting expectations from the outset, Jackson, that can really help significantly. And then the second aspect to it, which is kind of fundamental with the tax view, like tax is important, but invariably what I find is clients coming to me saying, we do their annual reports, they've made $100,000 or $150,000 or 50 or a loss or whatever it is. And then they go, now I've got to pay some tax. I've got no money. So they think about tax. They want to pay less tax. And the way to pay less tax is keep running your business the way that it is. No profit, no tax. That doesn't make any sense.
No.
Kind of a factor that goes with that is that tax is such an emotive subject. People hate paying it. This is where the coaching aspect that I get into really comes in. You've really got to get alongside people and go, actually, look, I want you to pay tax. I want you to pay heaps of tax because you're making heaps of money. It is training and development, and it is teaching them how to be an accountant, but giving them enough information so that you're helping them make decisions. And this is another factor that's been a downside to what we do. People come to us because we've got a suit on and we've spent 3 years at university and people think we know stuff. But they come to us and they kind of go, oh, here, Hector, can you take care of my business for you? No, I can't. Don't want to. We can do this together and I can coach you in this area. So a lot of it is about changing expectations and being clear about what we do and what we don't do.
Makes so much sense, mate. And look, this is why you and I get along, because there's a lot of synergies between both our upbringings and what got us to where we are, but also our philosophies around engaging clients. Because I see this all of the time, that clients try and abdicate financial responsibility. They're like, hey, you deal with it. You just tell me how it goes because I'm not a numbers person. And expecting that anybody else is going to love their money more than they do. And it's impossible. It just will never happen, right?
No.
And this is where the done with you approach is, because these are skills you have to learn. You have to know the basics of accounting. You have to know the basics of cash flow, and you need to know the basics of wealth. And we can make decisions together, but we're not going to make all of the decisions for you. And quite frankly, when we go through it the right way, and if you've got the right coaching and support, it's actually pretty easy when you boil it down. I think the unfortunate part for advisors or wealth coaches or accountants alike, sometimes they speak a different language. They're not great communicators. 100%. So therefore 100%. It becomes even more overwhelming, and clients go, I'm definitely not a numbers person now. So it's definitely the matching of the science and the art, which brings it all together really well.
The technical aspect that you talk about is quite significant. We accountants get together and we put our spreadsheets on and we friggin' look at somebody's business and we come up with a 15-page report with graphs and percentages and go, oh, that's amazing. Yeah. And the client looks at it and goes, oh, that looks cool, but I have got no idea what it says. Like literally no idea. That's why I've really tried to tax accounting is almost the secondary part of what we do.
Yes.
Primary aspect is teaching people about their cash flow in particular, because unlike profit and loss and balance sheet items, they're a bit more subjective. Cash flow, money in, money out, people understand it. I try and stay focused on keeping it simple, teaching them a little bit about that, leading them much more than expecting me to do all the work for them.
Makes a lot of sense. Awesome, mate. So look, from my experience, I have also been very fortunate to have some really good tax and business advisors over the years. And one of the most valuable things that I learned was around tax structuring. How do we use structures that allow us to optimize tax? Because I'm with you 100%. I want to pay more tax every single year. But of course, I don't want to pay bonuses to the tax man if I can, within the law, avoid it, right? So how important is tax structuring for a business owner as they're growing and scaling their business?
Look, I think it is important. It's a decision that, even though there's some complexities to it, I really try and impart a little bit of knowledge, cost benefit sort of stuff so that people can make an informed decision. One of the real downsides to it is similar to tax. People have an aversion to paying tax. So sometimes you can make the structure more complex than it needs to be. It's all very well, for example, to set up a company and then have a trust owner it, because you can get some tax benefits by having two structures. But if you have two structures, then you've got two lots of accounting fees. Sure. Very important, but like tax, it's important, from my perspective, it's really important to understand the context of it.
Yes.
To make it as simple as possible. Sometimes, generally speaking, setting up a business, default option is almost always a company. How many shares you have and who owns the shares and who's going to be directors, they're all decisions that I've just been helping a client with that recently. They set up the company, but with a bit of advice from us, a bit of conversation, helps them figure out what structure is going to work best for them. So again, it's not so much being directive, it's about giving them information, and then we can make the most of those structures.
And I think that's super important, right? Because as a business owner myself, although, and what might be a surprise, I don't perceive myself as being a finance guy, right? It's a part of what I do, but I like to keep it really simple. There are a lot of accountants or advisors out there that implement complexity because they can increase the fees and it makes them look cool because it's sophisticated and sexy. Look how many entities I've got, right? But I really like your approach of that cost benefit because, yes, like if we can't validate the value of this strategy above and beyond the cost, then why bloody do it? There's no point. And I think that's really a common sense approach. And it's more so educating those clients because that structure might shift and change over time, I suspect, depending on how big they grow their business and how much wealth they accumulate. So I think that's super important. Awesome, mate. So I think the next big thing here is as you're growing and scaling a business, like I see there's so many business owners that go through this cash flow crunch, particularly in this environment. We've got high inflation, increasing interest rates. We've got a skilled labour shortage in most of the developed world, particularly Australia, New Zealand. There's just not enough labour to go around, and supply and demand, the cost of labour is going up. Are you seeing a lot of businesses suffer the cash flow pinch? And what are some things that business owners can be doing to pivot and adjust for that?
This is kind of a good news, bad news answer. The bad news is, in my experiences, I would say more businesses are not good at managing their funds. There's going to be a lot of businesses really struggling right now because they're not managing it. The good news about that is, and this is part of what had me decide I had confidence enough to go into business, was that I'd seen there's so many people do it badly. You only actually have to do it a little bit better to really succeed. I think similar to you, Jackson, I've got a particular cash planning model that I use. It's a little bit like Mike McCullough's book, Profit First. Cash, it's basically bank balance accounting.
Perfect.
And as a rule of thumb, essentially what you're trying to do is accumulate 3 months worth of outgoings.
Yes.
So that if bad times hit, you're prepared for it. So it works with percentages. So you can assess where you're at now. And if your profit's at 2% or 5%, you can make marginal changes over time, set up a bunch of bank accounts, put the money aside so it's not accumulating in the one account. So you put your money aside for tax, you put your money aside for GST, you put your money aside for the important purchases that you want to make.
Yep.
Make sure you're putting your money aside for yourself. Manage on what you've got left over. So there's a whole bunch of little fairly straightforward principles in that. Grandma's, jars at home, putting money aside for the groceries and money aside for consumables and clothes and whatever else. It's a very straightforward tool. And the other thing about it is it's designed so that they can use it. So there's kind of three parts to what it is. That the first and the last part are a little bit more complex and probably need some support with, but the middle part is about doing transfers and a calculation sheet. I can teach anybody how to use it. It's a very empowering thing is what I've found, because a lot of people, most business owners, I would say, relate to money like it's a little bit complex, or they're accounting like it's too complex.
Yes.
And actually it's not. It's not. Almost always there's a little bit of learning. But if you're willing to do a little bit of work and a little bit of planning over time, you can make a real difference.
I agree, mate. I think this is the biggest and most common frustration we get from business owners, particularly once they get to multi-six figures or seven figures, is they're like, okay, there's this big disconnect between my accruals of what my accounting software tells me that I'm doing and my bank balance. And in many cases, they go in complete opposite directions. And the fundamental principle, if we want to get into the accounting speak of that, is understanding the balance sheet and the cash conversion cycle, right? And that can get complex very, very quickly. But bank balance accounting is simple, because all I've got to do is pull out my phone and have a look at my internet banking. And at any point in time, I can see to the cent exactly how I am performing. And it's a light bulb moment for many of these business owners where they go, I finally get it. And I finally feel in control of my cash flow. So I love that, mate. There's not enough businesses that are doing it. Like, in your experience, mate, how many clients have come to you with a successful cash management system like that in place prior to working with you?
One, the client that you recommended to me not so long ago. One. Yeah, so everyone else, no. Been teaching a woman who's got a small business literally downstairs in this building, and just great feedback from how it's going. Like, all of a sudden she understands it a little bit. And that's the other thing. When people don't understand, it's such a crucial part of the business.
Yes.
And when people don't understand it, they kind of feel inadequate. They kind of feel like it's out of control. Putting the control back into their hands and seeing that it is possible. It's like what you touched on to start with, which is, look, it's a little bit complex, but it's not rocket science, and actually pretty much anybody can learn it.
Beautiful. Makes so muit's sense. And look, I think we're fighting the same fight here, mate. And so if you guys have heard me preaching about this for ages, so hopefully if you haven't listened to me yet, listen to Hector, because it's going to change your life. So Hector, look, from an accounting standpoint, my biggest frustration has been with a lot of accountants is because many accountants, particularly tax accountants, validate their worth by tax savings, right? And as we know, that actually gets in the way of true wealth building. As a business owner, it's our duty to build wealth outside of the business so we can create financial freedom, because business is risky. So from your perspective, mate, and you've got a very different view, what's your perspective of the role of wealth as a business owner, and how do you think about it?
Wealth is like a number of things that it's like setting goals, Jackson. You first have to define what wealth means to you. Here's the term that I use a lot. It's about our financial freedom is about your relationship to money. At 55 and had a relatively successful business and a wife who earns a good salary, we've got more money than we've ever had in our life. That doesn't relieve me from being stressed about it. Wealth is about defining what it is, and you do this, right? When you're talking to somebody, it's like, well, where do you want to go? And this is another thing. I'm getting a bit animated here, but people don't think about these things. No. Seriously, Jackson, it's like, you start to sit down and ask them their goals, and you get blank looks. And coming back to that, so you've got to define what wealth means to you, what financial freedom means to you. Is it $1 million? Is it $1 billion? Is it actually living out in the wops? Your outgoings are 10 grand a year, and you sell some fruit on the side of the road. If that's financial freedom to you, knock yourself out. Yes. And so it's really, and that's been quite a big thing for me is I'm quite clear about my own stuff, but you've really got to learn to listen to people. So help them define their wealth, help them point them in the right direction, so you can help people start setting their path, because it really does mean a lot of different things to a lot of different people. And it's your relationship to money that is much more significant. That was something that I didn't learn growing up. I learned about scarcity, not about abundance.
I think that's great, mate. And this is the interesting thing, guys. And hopefully for all of you who are watching and listening, you can pick this up. When have you ever heard an accountant speak like? To be fair, Hector, when we had this conversation, I have been on the search for years to find a proactive, forward-facing accountant in New Zealand to send our New Zealand clients to. You're the first.
Awesome.
Because everyone else is talking ones and zeros, and they're looking in the rearview mirror and looking into the past, and they're basically historians. And they've probably never had a conversation like this about going deep into goals and objectives and understanding what it is that you're actually measuring success by. They've probably never even had that conversation with an accountant. And here is the point. Money is the vehicle to get us to a destination. It's a means to an end. It is not why we do what we do. We sometimes believe it is, but that's typically false. We need to get clear on what we're actually chasing and, more importantly, why, so then we can work out how do we support that with the right numbers, whether that be personally or in the business, to achieve those outcomes with peace of mind and certainty. That's what it's all about, right?
Yeah, and look, and part of what you're saying there, Jackson, I think the biggest thing for me is getting alongside the right people, it's been quite a challenge, to be fair, like finding really good coaches aligned with what you're about, because a lot of coaches are about just making money. Even sometimes they'll say they're not, but actually that's what it is about. It's fine if that's what it is for you, but it isn't that for most people. So asking those questions, and here's the other thing I was going to say, Jackson, which is about, and you'd see this, right? So someone who's financially competent, at least, if not an expert, right? You meet somebody, they start telling you about how they run their business, and inside you're kind of going, oh, seriously? You just can't be doing that, so they're miles from where they need to be.
Yes.
And so the challenge is going, okay, yep, let's set the goals, but you've really got to find the next best decision. What's the next best decision? That's a bigger part of the challenge for me. Is that's a practical thing, but it's quite an emotive thing. And that's where I think you touched on this as well, Jackson. It's like you've got to know what you're doing, but you've got to reach into people's hearts. It's an art form to it. That's one of the things you do really well. You're a real character. You're easy to relate to, easy to listen to. You do have to know what you're talking about. You do have to have the competence. See, here's the thing, actually. This is one of the things for accountants. It's the competence, but it's that middle piece of being able to communicate it in a way not only that makes sense to somebody's mind, but it has to make sense to their heart. I mean, that sounds pretty broad and airy-fairy from an accountant, but you have to meet people where they're at.
Yes, I agree, mate. And I think there's a degree of emotional intelligence, which I think just intrinsically many accountants, they're just not wired that way. They're very red-brain, logical, analytical folks, and they communicate in a very particular way, which basically doesn't necessarily resonate with the average person. This is why you're a bit of a unicorn, mate, and I'm glad that we've found you, and I'm sure many of our clients are going to feel the same. So, Hector, I think this has given people a really good feel for you, your skill set, what you can bring to the table, and really what they should think more broadly about growing and scaling their business. So, mate, who is an ideal client for you? How would you describe them?
Well, I'll tell you what we're looking at the moment is part of what I've recognised is that there's sometimes quite a gap between what we know and what the client knows. So one of the things we're looking at is particularly businesses that have got their own bookkeeper. We can train their bookkeeper in their cash flow system because most business owners don't want to get involved in the nitty-gritty. So people that have ideally people that are purpose-minded, but here's the thing I found. Actually, I can work with most people if we can find a like purpose, and generally we can. But people who've got a bookkeeper, they don't want to manage it themselves, but we can train their bookkeeper in a way of managing their cash flow so that they can focus on what they're good at and focus on the direction of their business, have someone else take care of the money, stay on top of things, get some cash flow accumulating, and reduce their stress level, increase their confidence.
Love it, mate. I think that paints a really good picture. So, Hector, if people have listened or watched this and they want to get in touch, what's the best way for them to reach you?
Probably to either go to the website, which is davidsonfraser.co.nz, Also on Facebook, it's Davidson Fraser, Master Your Cash Flow. And Master Your Cash Flow is the name of the cash flow planning process that we use. So those are probably the two easiest way.
We'll include the links in the show notes. And just as we wrap up, mate, if you had to summarize one last golden nugget for our listeners, what would that last golden nugget be, mate?
Look, I just think personal responsibility is a really big thing. It's not a particularly exciting or fun thing, but if you can be personally responsible, be honest about where you're at, and be humble enough to ask for help, that puts you in a really good position to find the right people, put the right processes in place. Yeah, not like I said, counting's not always sexy, mate. But if you apply it right, the results are great.
And mate, sometimes it's sticking to the tried and true, the boring stuff that makes the most sense. And I think this is our value to entrepreneurs. I think they chase shiny objects. We can bring them down to earth and keep it vanilla. Because although it's boring, we know that's where a lot of the results are, mate. So, mate, I appreciate you making the time. It's been super valuable. I know our audience is going to love it. So, guys, just remember, if you've listened to this, you've enjoyed it, drop it a like, share it with your network. And remember, a good idea in theory remains exactly that, just a good idea until you put it into practice. So make sure that you implement. So Hector, I appreciate you making the time, mate, and look forward to catching up again soon.
Thanks, Jackson. It was awesome. Great, mate.